Okay, this I decided to just do this because this is one of I think it's probably one of the most important things in the Wyckoff approach, but in any approach, not just the Wyckoff approach. All right, so just give me a second. Okay. All right. So basically, his approach. A lot of folks think that the Wyckoff approach has to do with the trend in the market, groups, sectors, and which one has the relative strength, which one has the biggest base, which one has the most potential, blah blah blah. But there's an underlying framework that like everyone's missing, because that underlying framework is, in my opinion, is the cause of success. All right, for all of these methods, not just in Wyckoff, but a lot of other traders that you see, this is the one thing that all of them have. All of them have. All right, that so that's why like I call it a cause. Okay, so what is it? It's an underlying process, yes, but it's a judgmental process, and you're gonna see them. And here's how you test this: whatever you trade, like find a successful trader you know he's successful making money, and watch his process. Like watch what he's doing, and then take another one and watch what they're doing. And you're gonna see that even though their methodologies are different, their judgmental process is basically the same. In many cases, it will be even identical. So, what is this? This is what I'm gonna try to explain. From the way Wyckoff explains it, I'll try to explain that as well. Um, okay. He says in his course, he says, and this is also a free course, by the way, the original one that I'm talking from. It's not the copyrighted one. It's the free one. He says that your judgment should be based on sound premises. You have all the facts. Okay, so step one is basically gathering facts. Now, what does this mean? All right, gathering facts. This is his underlying. This step one. So let's make it really applicable. For if you're trading, like let's say futures or forex or whatever, um, you could say it's the higher time frame trend. That's a fact. If it exists or doesn't, the higher time frame support and resistance, the current position of the market, is it at support and resistance? Where is price right now? Its current position, in relation to higher time frame trend. That's one. Let's put this together. The high time frame support resistance levels. Three, the position of price relative to support and resistance. Is price testing support and resistance level, or has the breakout just occurred and is price is at the bottom of a breakout? But basically, current price position relative to the trend and its support and resistance. Okay, so this is just some factors. Now, a lot of fundamental guys in forex, they will bring in other factors as well. It really doesn't matter. You might bring in, for example, some type of correlation, or what they'll bring in is fundamentals, a lot of fundamental data. So whatever it is, remember, step one is gathering facts. Facts, facts, facts. This is also where the indicators can shine, like any indicator can shine. In my opinion, this is where the any indicator that you use can shine, even if it's like RSI or all of those overbought, oversold, or whatever. At this point, you're just gathering facts. You're not judging. You're not analyzing. This is just fact gathering. Okay. So then on the lower time frame, oh, one more thing. Like if you're using higher time frame, or you might want to have the cause and effect targets. If you're using point and figure, for example. Okay. Um, you might have other things as well. For example, there's a numerous thing. I said indicator already. I said fundamentals already. Whatever. But the point is, this is where your fact gathering goes. This can be exhaustive, or this can be not exhaustive. It's really up to you. It's a personality type thing. But you must gather facts, and they need to be a substantial number of facts. It cannot be, you know, just the indicators green or red. These are facts, and preferably, like within the Wyckoff, it's what the market says about itself. So, but again, it's fact gathering and can be applied to any method. It can even be like relative strength, or in the stock approach, it would be okay, trend is up or down, the stock or the group is up or down, this stuff like that. His process. So that's part of fact gathering. Now go to the lower time frame, where the focus might be something like the behavior. What behavior? You might have a process where you look for ending action. Okay. You might have something that after ending action you're looking for, sign of strength or sign of weakness. You're looking for testing. You're looking for some type of confirmation in the form of a higher high or a lower low. Within that testing, you can have everything from your low volume pullback. You can have effort reward. You can have your springs and up thrust, whatever. Okay. Now notice this fact gathering. This I'm just giving an example, but you have for you, like, you need this step. If you're following any method or whatever Wyckoff did, or any successful trader will have this. There's a fact gathering method. I've seen like a lot of other types of traders where they're penny stock traders. What they'll do is they'll take a look at the SEC filings. They'll look at the float. They'll look at whether it's a low floater. They'll look at like if the sector is a hot sector, right? They want to get into hot sectors. They'll look, other people look for different things. But whatever your methodology is, you need to gather facts, and it needs to be a lot of facts. It cannot be one or two things. It needs to be a significant amount of things where you're gathering facts. Now there is a additional step where you can kind of rank facts, but I don't think that's all of that is rocket science is necessary. All right, so you get a higher time frame, you get a lower time frame. So you might have something like a climax or a secondary test, whatever. But this is, again, I want to say it again and again and again, high, high, low, low confirmation or something like that. But it's just a list of facts. So he basically says, you have all the facts. That's what he says. Your judgment should be based on sound principles. You have all the facts. Okay. Next step is assembling them facts. All right. Now, what does that mean to assemble? By the way, this step that I'm showing, you might think this is trivial, but this is trading. Okay. This is it. And it took a long time to figure this shit out. But whatever. The assemble of facts is actually structuring data. Okay? So assembling facts is structuring data. I'll try to explain what that is. It's basically structuring the facts. How do you structure facts? Well, you put the facts together, you sort them, you categorize them. The point is, they're not like one here and one there. They are put together. Okay, so now I'll give an example of how to do this. Again, on a higher time frame, it could be the market is in a certain position. All right, for example, it's on a breakout test. Okay, breakout, then test, rally, and then pullback. Okay, you have that. Breakout, then test. All right. Other folks may have different things. They may structure the facts in a different way. They may say, okay, it's at a certain level, it's at a certain zone, and they have all the data about that. You know, some folks will even use bands. They use dynamic bands and all that. But structuring the facts is where you use your tools and techniques. A very easy example, just to give you an idea, is if you want to divide something, right? Now maybe I'll use a different example, but this is where you use your tools and techniques. All right, where you gather facts, and now you start assembling them. Where you start applying your tools and your techniques, the application of them. So one tool or technique is the test. The test. Okay, now you say, how is that a tool? How is that a technique? I don't want to get into that. But you know that this behavior of rally and pull back to test, rally and pull back to test always occurs in the market. Like, it's just a matter of how high it goes. But it's a natural movement of the market where it rallies and pullbacks because supply and demand are actually sequential. They take turns. So the test, that's one technique. Okay, on a lower time frame, it may be a sequence. Okay, so for example, you have your climax, then you have that secondary test, then you have that rally, was a sign of strength or sign of weakness, and then you have a pullback. You might have effort reward. Effort reward is I guess it's a behavior, but it would qualify low volume pullbacks, springs, and up thrusts. So that is what you're doing, and notice how you're combining with the higher time frame and the lower time frame. So you're structuring it, you're taking these disparate pieces of facts, these different information, and putting it together, assembling the facts. That's the word he termed, but it's really just structuring them. Or you might have, on a tape reading chart or low time frame, you might have a springboard, right? So these tools and techniques, that's what you want to take the facts and then apply tools and techniques. So for me, the ones that test, then some type of sequence where I see ending action and a reversal, and then this would also be a technique, a springboard. Okay, that that's how I assemble the facts to see if the market is on a springboard. Okay, but it's really assembling these facts and really think about it. Like like a very simple example. If you still don't get it, is if you're dividing something like, I don't know, 100 divided by 10, right? You use a tool or a technique that you learn in school where it's basically the I can't really draw it, but let me see if I can draw it. So let's say you're doing some, they tell you 100 and then divide it by 10. So what technique do you use? You use, remember this, 10 into 100, right? Or if you're multiplying 10 times 9, they give you this shit, but it's like 10 multiplied by 9, and then you use this line over here, and then you go, 9 and 0, and then 9 and 1, right? So that's a technique. It's a very simple example. So you have that divisor is a technique, and this multiplication thing is a technique. That's how you do it, right? Manually. So similarly, you need some when you're assembling the data, you want to get your tools and techniques ready. You structure the facts. Uh, you're just getting that ready, and then what you do, as he explains, is perform the diagnosis. This is Wyckoff's words, folks. Like the gathering facts, assemble diagnosis, and all that. All right, diagnosis is the application of the techniques. Okay, that's the application or the analysis. All right, that's the application. So you got the facts, you assemble the facts together, and then you apply the techniques. Whatever it is that you use. Some folks will use median line techniques to see if it's the midline or if it broke out of that. Some folks will use trend line technique. Some folks will use moving average technique. Some momentum traders will use the momentum, MACDs, whatever. So they'll use that. But it's along the options traders will use open interest um, and implied volatility. Anyway, so this is the third step. Okay, the fourth step, what he says, is your diagnosis becomes a command to trade. So he basically says, so you have the diagnosis and then you decide. Decide what the situation calls for. So decision. Okay, decide what the decision. But he says at this point, your decision becomes a command to trade. Not only does it become a command to trade, but it requires courage. Courage to trade. So you have your decision. The diagnosis is nothing but the analysis. Like you've done the analysis. At this point, the application of techniques. This is all part of the analysis. Okay. The resulting analysis results in a decision, which is the command to trade, and requires courage to execute. Okay? Now, having done that, you must always remember that you must be ready to revise. Okay? So the first three steps are analytical. The fourth is really execution. Oops. The fourth is execution. Okay, the first three are the analytical, the analysis that's required. Gathering facts, assembling, then diagnosing. That's all, But what happens, as he says, you have like an internal signal. The signal is not indicator based, but it's like an internal signal that tells you, okay, do this. Okay, so that's what he's talking about, where you reach a decision from the diagnosis, and it becomes a command to trade, and that command to trade requires courage. Now, having done this, you must anticipate additional information, and you must anticipate change. So even though you have a decision, you are ready to revise. And basically what he says is, having placed your order, never fear to revise your opinion. You must have flexibility, meaning flexibility of mind in your opinion. The mere holding of a certain position is no reason for your holding it, meaning continuing to hold it. Never be bullish or bearish just because you're in the trade. And the market tells you what to do. It continuously confirms or cancels its previous indication. So that's the thing. Revise, because the market can cancel or confirm your decision with new indications. That's very important. All right, this is where everyone gets screwed. They perform a lot of analysis, but without judgment. For some reason, it's just ours. This is doing this, this is doing that, whatever. But this is a problem, because what they say, you get married to the trade. What happens here is you have two factors once you put on a trade: fear of being wrong, fear of loss. These are the two that will stop you from taking small losses, or getting out the position, or even reversing the position. Okay, so what you need to do is, in advance, be ready to be given new information, and for new indications to cancel out older indications. Meaning, be ready to revise ahead of time. So when you put on a decision to go long or short, understand that there should be no resistance for you to say, oh shit, this is something else. Okay, Mark Douglas, he describes what this is by saying that most people will only change their mind or revise their opinion after they've reached a pain threshold, or what he calls a forced awakening. Forced awakening is when the pain gets so much that you have to change your opinion. So you keep losing, you keep losing, you keep losing, and then you change your opinion. What Wyckoff is saying here is, before you put on the trade, anticipate a revision. Anticipate that the market will then confirm or deny your judgment. It will confirm or cancel its previous indications. So the market's going to confirm whether you're right or wrong. Okay. So these steps. Now here's the test. Take any successful trader. It don't matter if you trade penny stocks, or you trade futures or forex. Look at the trader that really knows what they're doing and making bling, and see if they don't carry out these. Just see if they don't carry out this, and then you'll figure out, like, this is what the process is about. This is the process. This is the judgmental process of underlying not just trading but other things as well. Okay, this is the judgmental process, and this is what most people will not do. They just won't do it, because subconsciously what they want to do is, they don't want to take responsibility or accountability. Associated with being wrong. Why? Because psychologically, being wrong leads to pain. And that's what you've learned all your life. That's what Douglas talks about. So even even if they know, it's very unlikely that they'll go through this because of this reason, which is subconscious. Meaning, somewhere in the past, they've taken responsibility, accountability, and learned that when they're wrong, it led to a whole lot of pain. All right, and then they can't do anything about that in the market. They can't pass it on to the next guy, blame someone else. None of that works, right? So this will subconsciously stop you for many years, maybe 10 years, of going through the fact gathering, structuring and assembling, diagnosis, taking the decision and acting on it with courage, and then getting ready to revise. Because somewhere in the earlier childhood or whatever, this led to a lot of pain. It could have been on a something simple as a failing exam or something like that. So anyway, without getting into all of that, this is the real process. Take care. Bye bye.